Tell me your stock is manipulated without telling me your stock is manipulated. 12.07 million in volume with zero price action, literally not 1 cent up, not 1 cent down. It is absolutely amazing how controlled a ticker can be. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Now, I'm a little bit aggravated, and the reason I am is because I have recorded this video once a full time and the mic wasn't recording. I recorded this video twice a second time, and I told you guys in that second recording that I recorded this one time and that the mic was not working, and the second time when I was editing it halfway through, there was a shit ton of background noise because apparently my t-shirt mic was hitting my desk. It's the third take all the way through, so keep that in mind. Please just hit the like button, hit the subscribe button. We are nearing 13,000 subscribers, so thank you guys so much. Without further ado, we have a ton of stuff to go over, so stay till the end of the video so you don't have to watch another update video here on YouTube. Let's get into it. So AMC, according to Ortex, is sitting at 25.13% short interest. Shares on loan is nearing an all-time high, almost at 201 million. Utilization is maxed out. The cost to borrow dipped a little bit from the all-time highs around 1,000, but it's still sitting substantially high at 770%, and the max at 780%. So shorts are still paying a huge part of their position just to borrow shares. As for a 5.74% short interest, utilization at 74%, and the cost to borrow not being reported to us. Now, AMC should have been on the number 2 spot for the short borrow rate ranking list, but Fintel does a terrible job of keeping their data up to date. It's not even on the top 10 for the list, even though it has the highest borrow rate across the entire market, if not second highest as of now, with that drop to about 700%. So either Fintel is just horrible at reporting, or they're being paid to not include AMC on this ticker list because they know that it will cause some more FOMO to jump into the stock. Now, speaking of glitches, cost to borrow, and AMC not showing up, TD has AMC at a $7.9 billion market cap. Yesterday, it was at $7.7 billion. Why is this rising slightly? Why is it not getting fixed? Could this show that synthetic shares are being used against the play and they're slowly adding up, slipping through the cracks, but we are not seeing it reflect price action, but we are seeing it reflect data that's reported to us. And again, no one is doing anything about this. You let me know what you think in the comments down below. Now, this is important because we're going to touch on margin calls in a minute. On Bloomberg, at some point, you are going to get a stock market cover of the shorts. Basically, he's saying that very, very soon, a lot of shorts are going to have a massive covering across the market. This is going to trigger margin calls. This is going to trigger dominoes to fall. I'm going to show you this 15-second clip before we get into some more important stuff.
But at some point, given this economic data, you're going to get a stock market cover of the shorts, the gloom, the caution that's out there. Where is that throw in the towel move given this kind of economic data? It's out there somewhere.
But speaking of that, if they're so sure AMC is going down, why did Citigroup increase their AMC position by 10x in Q4, going from 158,000 shares to 1.039 million shares? They know it's going up. They're trapped in their short and hedged to compensate. Lending for now will recall. Now, Citigroup increased their AMC position by a substantial amount. This could be to hedge, or it could mean they know something's coming and they can't get out of their shorts. This leads me to one say that shorts can't get out because there are no shares available for them to cover on. So the only thing that could substantially cause catastrophic prices, catastrophic events to happen is margin calls. Now, if margin calls occur, that's it. Everything's wiped out. People are being bankrupt, and me, you, the average retail investor, are becoming millionaires, which should have happened already. But beyond the fact, I have a little bit of a theory that I want you to think about. Are they hedging to hedge because they can't get out of their shorts, or are they hedging because the cost to borrow fee is so high and they want that interest? Because if they're short, and they do an equally as short long position as their short position, right? So equal amount of shares that they're borrowing against the stock they actually purchased for the stock. Now they have an equal open position, so they are essentially not paying that cost to borrow, right? Because they're lending their shares for 1,000, but they're paying 1,000, so they're paying this interest to themselves. Therefore, nothing's changing. Do you think that is something that shorts are doing right now with that insanely high cost to borrow fee? And again, these institutions' buy orders don't get dropped on the lit market; they go to to dark pool because they are private funds. And again, Gary Gensler said 90 to 95% of retail orders anyway go to dark pools as well. You guys let me know your thoughts on this in the comments down below. I was just thinking about it, something interesting. As for Stonko Tracker for AMC, 150,000 shares available to borrow, most recent fee of 763%, recently at 980 this morning, but it got dropped a little bit. We are winning on the options chain, 65,000 calls compared to 22,000 puts expiring in the money, and next week's options chain expiring April 21st is huge. But even more are betting puts than calls, but even the call side of the chain is huge as well. So just keep that in mind. I'm going to tell you why I think bears are going to win coming into next week in the very, very short term. But again, short exempts still stacked up very high. Anytime AMC wants to move, they dump short exempts on it, stumping the momentum. Adam Aron tweeted this: with more and more electric powered and hybrid vehicles being sold every day in the US and people often parking their cars at AMC theaters for about 3 hours, do you think we should install for pay electric parking charging stations at our theaters where we control the parking? Yes, the planet needs it. Yes, why not? No, not enough cars. Or no, a wasted effort. You guys let me know in the comments what you think about this. Will it fundamentally improve the company, or is it essentially just a bad idea? I think if I were to own an electric car, and if it's true that a lot of people with electric cars go to movie theaters, I would plug in my car at the movie theater and I would pay for it there instead of wasting a couple hours out of my day when I actually have stuff to do. If I'm sitting in the movie theater for a couple hours, I will plug it in. I will pay to charge. So I think it's a decent idea. However, it is a shot in the dark, but you let me know what you think in the comments down below. Now, Adam Aron also spoke in Boston. He said there was around 3.5 million retail investors. So taking that number and the entire float of AMC and APE, not subtracting Antera, each investor would need to hold 148 AMC shares and 265 APE shares. Now, you don't have to disclose to me in the comments. That's a private thing. Feel free to, not share it. But I think a lot of us apes hold more than these shares for AMC and APE. And if not, the ones who do hold for the ones who don't have that many shares, right? I think the ones who own more than this own substantially more. At least speaking for me and a handful of people, I think that we own well over the float of AMC. You let me know in the comments down below if you own more or less, or feel free to not disclose at all. Before we get into the charts and close out the video, make sure to get up to 17 free stocks. Just download Moomoo using my link and make a deposit. You're also getting free level 2 order book data so you can see where whales are loading up and dropping off shares, which can tell you where a stock is going to go, access to trading options, going long, going short, further expiration prices, and more. Also, guys, join the Discord where we have options trading alerts, talk stocks all day long, and we post gains and losses in there as well. Back to the video. So AMC, I recorded the video twice, so you're seeing these white circles on my chart. What I was basically talking about is AMC's trading at $5.64, up 3.78% on the day. Not much volume, right around 17 million in volume, but it's getting a hammer candle above this green box, above this cycle. And when this cycle plays out, you see a push for a few days, which you might see for the rest of the week, but it is looking for a rejection. Every time it gets a hard rejection at some point, especially the longer it trades above the parallel channel. And AMC is trading above this little red parallel channel that we have drawn out. Whether that rejection's at $5.85, whether that rejection's at $6, whether it's at $7, I think coming into next week, that is where bears are going to win on the options chain, because this is the exact way the cycle plays out. It comes up for a few days and then it gets slaughtered. Even if it's very temporarily, you see it time and time again. You see it right here. After it reached that high out of the parallel channel, got slaughtered. You see it right here, right? Hit that high, got slaughtered to the downside, even if it's temporarily, and you see it right here as well. So that is my expectations for the very, very short term come next week on AMC. As for GameStop, getting a hammer candle, trading at $22.80, basically sideways on the day. Now, this is nice because it held resistance at $22.30. It tested it about a few times, broke over, and actually based off of it. So if GameStop rips again, I would watch for a rejection on this overall trend line above, right around $23.70, $23.75. I'd watch for that rejection on GameStop, and you want to see that hold $22.30 still. If GameStop breaks below $21.18, I would call that confirmation that we are most likely going to get that gap fill down to $18.30. I am still calling for that, especially how many people are bearish on AMC. If AMC dumps, chances are GameStop will dump with it. as well as GameStop has the potential of playing out the rest of this cycle, which would show a sell-off going forward, right? Could be wrong, but this is the short-term outlook on both of these. Now, the US banking system dumped almost 110 billion of MBS bonds into the market during last week of March. Just in 1 week, you see this thing dumping. Do they need money? Do people need money? How bad is the banking crisis? Are margin calls about to hit? You let me know what you think in the comments down below. And China reportedly plans to impose a no-fly zone north of Taiwan for 3 days, which is weird because they just had their drills in Taiwan. Now they're doing a no-fly zone for 3 days. Everything is just sketchy, whether it's a World War III, whether it's talking currencies, economy, CBDC, whatever it is, right? Everything is just sketchy to say the least. You let me know your outlook on this down below. Before we touch on the SPY, March CPI came in today, shows inflation at 5%, below expectations of 5.2, core CPI of inflation at 5.6, which is in line with expectations, and we now have seen 23 consecutive months with inflation above 5%. This is the cost of quote-unquote free money and 0% interest rates. Now, why did the SPY decide it wanted to dump and then trade sideways, trading at 410.57? Well, this could be anticipation of the Fed minutes coming out probably a half hour after I'm making this video. Again, this video would have been up like an hour and a half ago, but it's just such a pain. I research, edit, record, upload, whatever, and I just have to do it multiple times over. So the SPY got a beautiful double top that I want you to pay attention to right around 411.50. This double top indicates that the SPY is going to sell off even further. Does that have to happen? Not necessarily, but I personally would be watching for at least a retracement down to 405.50, if not that 404 level that we have been calling out for the SPY. If we break higher, sure, fine. It might be temporary. Only way it's not temporary is if we get a clean break over 420, and that is my outlook on the SPY. Overall, guys, hopefully you enjoyed watching the video or found value out of the video. Let me know your sentiment in the comments down below. Hit the like on your way out. Hit the subscribe button. Check the links under the video for all the good stuff. I love you all. Lottery Stocks out.